Good morning, good afternoon, good evening, depending where you are on the planet. And welcome to the Bull versus Bear webinar. Steve Mully on the call on Tuesday, the 2nd of August for TradeDay.com. Welcome, everyone. We're going to go through our usual regular run through in here today, calendar, what we've had, what we've got coming up. We'll take a look at the articles from the major news wires, what in the fundamental geopolitical space is impacting markets right here, right now. And we will also take a look at the charts to see where the interesting levels are on the charts, where the opportunities might lie today. Well, from my perspective, anyway. So let's kick off with what we've had. Well, we've had the RBA didn't really have a significant impact because it came in fairly in line with expectations, but we should mention it. So the RBA, the Reserve Bank of Australia, made their decision last night, overnight. So they cut rates in here. Cut rates. Who's cutting rates? They hiked rates. As anticipated in here by 0.5%. But actually the Australian dollar got hit on the back of that. Their tone was slightly more dovish than anticipated. So the RBA in here hiking rates are 0.5% as anticipated, but the Australian dollar weaker on the back of that. I do have an article. Did I open it up in here? Where are we? I read it earlier on, but I didn't open it up. Okay, here we go. So this is on forex side. This is another site. I don't visit here very often, guys. It's very good for forex. It's good across the board, actually. These are all ex-traders and analysts from investment banks who run this site and comment on this site. It's a really good site. So I know these guys personally, and they're good analysts. So do trust the site. It's forexlive.com. Okay, and they do a newsletter as well. You can subscribe to. You get like a daily newsletter as well. So let me just put that into the chat as well in here. So it's Forex Live. You can grab it from the chat if you want. So there it is. So you can see Aussie down on the day, RBH, and the Aussie skids as perceived to turn less hawkish. So didn't turn necessarily more hawkish. More dovish, but less hawkish, so de facto more hawkish. And you can see it very similar to the Fed. Look, so it says here, their forward guidance by stating that they were not going to be on a preset path moving forward. That hits the potential for the tightening cycle to slow down and is dragging the Aussie lower. Much like the Fed last week, the RBA seems to be one of the first you said to be angling towards that, at least in a more clear and concise manner. So yeah, similar to what the Fed, this Fed pivot, central banks seem to be saying, right? What we've done so far seems to be working. The economies are slowing down. It is having an impact onto growth. In turn, that should have an impact into prices and inflation. And therefore, maybe we've done kind of not quite enough yet, but we don't need to increase the pace. If anything, we might be slowing the pace. Okay, that's kind of what the market interpreted from Powell last week, and we saw the dollar weaken. We saw stocks like that, a pivot away from a more hawkish stance, and then similar in here for the RBA. The Reserve Bank of Australia, and then we're seeing the Australian dollar weaken on the back of that, obviously. So it's down 1% against the US dollar. So that's something just to note, really. It's not going to impact really on what you guys are probably looking at and trading, unless you are trading the currencies, unless you are trading the Australian dollar. It does show that global central banks are starting to take this on board in here at the moment. Okay, so we've definitely seen an impact in here in the market. So that was the first thing we had over here overnight. Some light data out of the UK, Switzerland, nothing to really of note in here. We get Bullard, so we got really none of the big data out in here today out of the US. What we do get is the crude oil stocks. If you're trading oil, this could have a knock-on effect in here. There's something that I missed actually this week when we went through the weekly. I don't know how I missed this, but there's an OPEC meeting this week, which I think I've got in here. So on the article, so oil dipped before OPEC Plus and OPEC Plus. When is that? Let's get down to an OPEC Plus meeting. Does it say when it is? It says due to gather virtually on Wednesday. Okay, so Wednesday. Okay, so ahead of there, oil has been tracking lower. It certainly had a big sell-off yesterday. in here, but we will be keeping an eye on, just going back to this data, but probably not going to have a massive impact, the API weekly crude oil stock data, given that we are running into that OPEC plus meeting tomorrow. Okay. We also get Bullard speaking later today, 18:45, very late in the day, 18:45 Eastern time. Okay, so effectively into the next trading session as far as TradeDay.com, after the bell, after the close, after the futures have closed and reopened in here. So 18:45 Eastern, Bullard speaking late in the day. Right, let's take a look what's impacting markets. Well, markets, when I say markets, I'm talking stock markets. Stock indices are down significantly this morning. Massive sell-offs, but they are down, and that is primarily being driven by this Taiwan visit now. I'm a little surprised, if I'm really honest, because this has been flagged. This has been on the cards. She was due to go. It's all been in the diary, and then the fact that she's about to land. There's been a big kind of reaction. Markets don't usually react like this, so I'm a little surprised. Because I'm a bit surprised, it probably means that we should be watching it, right? I don't think people were really expecting. I don't think the market was kind of expecting this, hence it's moved, right? The market was expecting the move, it wouldn't move. So the fact is that even though it was in the diary, even though it's been scheduled, I think there was some, like, the market was maybe thinking that it would be cancelled because China had. Well, it says defiance of Chinese threats. Well, what are those Chinese threats? I don't know, but Pelosi is the most senior U.S. politician to visit in 25 years. Obviously, there's a lot of China's foreign minister has already marked that the People's Liberation Army won't sit idly by should she make a visit through the White House, insisted that trip doesn't signal a change of US posture towards the island. So we've seen safe haven, so the yen advanced, treasury yields fell, stocks lower. Chinese stocks, Asian stocks got hit particularly, dragged European stocks down this morning, and US futures are lower. All pretty much put down to this, okay? It does surprise me a little bit. I think it's a bit of a storm. Obviously in the bigger picture, it's not a storm in a teacup, right? I don't know if that's a phrase that translates across the Atlantic for the guys in the US. Storm in a teacup. Do you use storm in a teacup, guys? Or is that an English saying? I don't know, but I mean, storm in a teacup means it's a minor thing, right? Big picture is not a minor thing, right? Big picture, the whole situation with Taiwan is potentially a big flashpoint going forward, and it has been that way for not only months but years. But equally, I don't think this visit is going to be the start of anything potentially significant. So this will all be forgotten within a couple of days, likely. And so the fact that we've got markets significantly lower, is probably, then you probably fade that move. By fade that move, I mean oppose that move. So yeah, so that's the main news. We've got some other stuff in here about spending source, Republicans using this bird rule to challenge various pieces of spending and various pieces of legislation. Republicans challenging the Democrats through this bird rule, which I'd not heard of until I read up about it today. But I don't think that's anything that's going to particularly tempest in the teacup. Oh, thank you very much, Clinton. So all of this in here, I don't think really is actually going to impact anything we're looking at today. This as well, this is interesting, but nothing is going to. The first half of 2022 was bad for US credit, investment grade, high yield. It's the worst ever. But then equally, not really impacting markets we're looking at. And European stocks and futures are lower, US futures lower on the back of these tensions. Yeah, so US-China tensions, right after Pelosi's visit. Energy companies did well. There were big numbers from BP. If I go to the... have I closed it? I think I may have closed it. Let me reopen in here. So the investing.com calendar. So, and actually, just to mention Caterpillar as well. Caterpillar in here. I mentioned this was the one we'd be watching this week. So a very, 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 very slight miss on revenue, and a very slight and a beat here on for Caterpillar on earnings. And if we go and take a look in here, so remember, Caterpillar is often seen as a barometer of the US construction industry, and so sales miss estimates and supply chain troubles. Russia halt. So yeah, a slight negative from that. And so Caterpillar shares of the heavy equipment its performance is seen as a barometer for global industrial activity, and also the construction industry in the US. Were down 3% in pre-market trading. Okay, so that's a definite negative. That was one of the ones I was watching out for today. Let me go back to the earnings calendar. I just want to show you this one in here. So I'll go to the filters and we'll go to we'll turn off US and we'll go to UK, and we're only going to go for the big boys. And what I'm going to tick is the energy sector in here to get it right down so I get to what I want to get to. You had BP today. This was absolutely huge. It's grabbed the headlines all over the UK today, in the mainstream media as well in here. So their revenue came in at 67 billion, with projections of 58 in here, and that was a huge beat. Okay, and a lot of question marks around that, given that we've got kind of energy crisis going on and cost of living crisis in the UK. Energy prices across the board. Electricity, etc., etc. And BP posting these huge profits in here. But nevertheless, that was a big win in there for BP this morning. And they do mention that in here as well. So stocks up on the back of that. UK energy stocks anyway up on the back of that. What else do we have in here for you? Obviously, we're going to be watching the visit to Taiwan. She's not due to land, I think, till tonight. I think tonight is US time. Yeah, it says Tuesday evening. I think that's US time, because this is the US newsletter, okay, from Bloomberg. So I think this Tuesday evening US time. Okay, so probably won't get too much on that, but maybe we'll get some developments overnight from China. Who knows? So yeah, just to run through the headlines: stocks drop as US-China tension stirs haven demand. So we go into little risk-off mode. Yen is stronger. And we've seen gold up as well, and treasury is higher, getting bid, going up on the in price on the back of that as a safe haven demand. And then look, risk off mood hits European shares. Sino US tensions away. Sino being China, yeah. So all the same headlines across the board. Pelosi's Taiwan trip raises angst in global financial. Chinese Hong Kong stocks lead losses in Asia. Tensions rise. China has warned of grave consequences when Pelosi visit. What else? Gold up, 4-week high as a safe haven, although the dollar's up as well. But dollar's actually not up massively in here as a safe haven today. We have seen dollar yen went lower, but dollar yen's been going lower anyway. But if you look, dollar's not particularly up against the euro or the pound. It's up 0.2, not much at all. Aussie dollar's down, but that's because of the Aussie. Dollar CAD's fairly unchanged, against the Canadian dollar. So that just shows you there's not been a big move. Slight move into yen, you would say, from the dollar side of things. But gold seemed to be reacting in a positive way, although gold was rallying anyway, right? So gold's up. Actually, gold's not massively up in itself either. So yeah. Oil dips before OPEC. We've already spoken about that. Caterpillar, we've spoken about that. And just having a look on the where we are. So European stocks, the actual cash indices are down about 1% today on the back of the weakness in Asian stocks on the basis of the Pelosi visit, and US stock futures in here this morning aiming about 2/3 to 0.75% down between the Dow, S&P, and Nasdaq. Again, on the back of that, having had a slight dip yesterday as well. Quick nod to the CME tool, but not much change in here. This is hovering around 75.80 for since the last meeting, and certainly we seem to be looking for that 50 basis point hike at the next meeting there. Let's go to the charts. Not a huge amount to say, but certainly a more negative tone going into today. So we did get a bit of a dip yesterday, dip and a rebound, but come on, because this is the S&P, by the way. So more of a consolidation feel. We did just make a new high. It's almost like an inside day, an inside pattern being when the range is inside. So almost yesterday's activity almost caught inside Friday's range. We did just make a new high, and now you can see this morning on the overnight we're back sitting right on yesterday's lows. If we go to the 15-minute chart in here now, it does look wobbly. That looks like threat of a top. Yesterday we said, okay, it was holding around the 50% when we spoke, right? When we spoke yesterday. So where are we now on timing? It's got me in here at 2. Okay. In here. So we were in here. Over here, I think we were holding around the 50% level in here, and you can see the market now has made that new high, has drifted lower, and looks kind of, it's vulnerable, looking vulnerable, sitting just above the lows in here from yesterday. So it does look vulnerable to a break through that low, and similar with the Nasdaq in here. Nasdaq's actually broken through yesterday's low. And does look vulnerable to a little setback. So you get yesterday's pattern. You see this pattern in here, this candlestick. I'll zoom in a little bit so you can see it. But this candlestick here is called a long-legged doji. It's when we get get 2 long legs, and then the market kind of closes pretty much unchanged. Long-legged doji, often a sign of a turning point. The turning point is confirmed when you break through the low of that session, right? And we're already through the low of the session on the overnight. So this has been confirmed. This long-legged doji has been confirmed as a turning point. So on the Nasdaq, it looks vulnerable. Down through the low here, and now we are getting a bit of a bounce in here, but this looks vulnerable to me. I do think that I wouldn't say this is necessarily a buy opportunity now. I think this is still this little rebound we're seeing. I think it's sell opportunity now, and I would be looking for the market lower in here going into today. So yeah, usually I'm a bit of an eternal bull in here. You've got this little internal trend line comes through here. You see the market's gone right up to that. We're flirting with it now. I think now could potentially be sell opportunity. Stop maybe above these peaks here, these kind of little overnight peaks around the kind of 12.95 area. We're short here for a move back down. Here's Friday's lows. Okay, down towards 12.740, 45. 12.745 kind of area. So, but if we take out these peaks here, so that peak there, 12.95, then it could easily be all the way back up here again, right? So it's a little bit binary. I've not got a strong view today, more like 65%, maybe only 60% bearish. I think there is a trade in there to short here with a stop and reverse above 12.925 on the Nasdaq, and similarly here if we go to the S&P. Be looking to any kind of rebound into here. I think I might have a little delayed feed in here. Let's go double check that. Or break below the lows in here and here. Okay, if it breaks down through here, then it looks more vulnerable as well for the S&P, the lows from yesterday. So yeah, be watching those levels on the downside certainly. Let's go and take a quick nod to gold and oil. So gold continues its march higher, as we said, potentially safe haven bid. Dollar's not had a big move in here today. If we look at the dollar index, kind of flat, it has had a slight bid, so that should send gold lower. So the fact that gold, slight rebound, dollar's slightly up, it's been drifted going lower. So we have this less kind of hawkish tone, this pivot from the Fed. It's been going down. We've been talking about that over the last few weeks. But a slight bid in here, a slight rebound today, and that's on the slight bid as a safe haven. And that should, if anything, with the inverse relationship, send gold down, but gold's continued higher, maybe as a safe haven. Okay, so gold pushing higher in here, and it's just on the back of this. So, and it's not particularly up. It's been fairly slow moves the last couple of days. Friday and Monday was fairly slow moves higher, and a slight push higher today. I wouldn't be surprised going into the 15-minute chart in here to see gold. You can see just below this peak, gold pushing notably higher going into. I would expect another decent push higher going into today for gold. Let's take a look at oil first on the daily. So we did get a significant sell-off. We get that kind of failure candlestick in here back on Friday. The shooting star. Remember, we spoke about this 102.00 high there. We failed at 108.88. I was bearish going into yesterday, and the market obviously did sell off further. Took out the low there, which was 93.01. Got down to 92.42. We've had a little rebound from here. Let's go into 15-minute chart. Yeah, so it is rebounding. I mean, it looks like it's trying to form a little base. If it takes out that high there, there's probably a bit of upside. I think there's a couple of trades in here. So that high there is 94.76. Up through there, probably aims us back up towards 96, 97 kind of area, up into this area here. But then probably looking to reinitiate a short up here. So I think there's two trades. Probably now as a day trade to push higher. Okay, it's like breaking as we speak kind of stuff. And then there's another trade maybe later in the day to short it from up here somewhere. And then you would like put on, where the potential resistances are. So we would be looking, you're sort of up through this trend line. So it's already up through this trend line. So it's kind of already getting the base in. It's taken out these peaks here, and it's flirting with that peak there, as I say. 94.76 up through there. Excuse me, 94.76. It looks even more bullish. What's the high been? We've been up to 72. So up through 94.76, that could lead the next leg higher. I would then be looking at potential areas for them to reshort, and then probably looking at the Fibonacci retracement. So of the move here. Maybe if it gets up to the 38.2, somewhere between the 38.2 and the 50, 38.2, just above $96, and then the 50% is like 97, like 15. So somewhere in there, looking for the market to fade. So upside, there's a trade for the upside into that area, I think, and then looking for it to fade back from that kind of area there on oil. Okay. That's what I've got, guys. Don't see any questions in the chat, so I'm going to wrap it up there. Going to wish you, as ever, a great trading day. Stay safe out there. I will be back with you with another bull versus bear webinar tomorrow. Take care.